Billionaire investor Ron Barron was on TV today and said that Tesla stock he thinks will reach $1,500 by 2030.
Legendary investor Ron Barron, the chairman and CEO of Barron Capital, is here with us this morning. According to Morningstar Direct, the Barron Partners Fund retail share class is ranked #1 out of more than 2,100 share classes since its conversion to a mutual fund nearly 20 years ago. We want to welcome Ron. And Ron, it's great to see you this morning. Thank you for being here on set with us.
Great to see you and great to see you.
Great to see you.
You told me at one point, I don't know, in the last year or so, that one of the biggest vulnerabilities Tesla has is that Elon Musk is the key man and that he is very important. It's very important he be there. His time has gotten divided by what's going on with Twitter, what's going on with some lawsuits he's had to deal with, what's going on with SpaceX. Look, he's been doing Tesla and SpaceX both for a long time. He himself admitted that the last 3 months have been terrible, that he wouldn't wish that pain on anybody. Do you think you have his time, focus, and attention back for Tesla and SpaceX?
Plus his back.
And his back.
Plus sleeping on the floor.
Yeah,
that doesn't do good for your back.
He said himself that he would not wish this on his worst enemy.
Yep. He did that before when he was trying to get started with his production of the Model 3 and Model Y. He is a driven man. But he has 120,000 people at Tesla, and he has 11,000 people at SpaceX. And he has an incredibly talented core of people who are real young and been there a real long time. And he's got the culture. The culture he has is being innovative and driving down his costs, driving down the costs. He's got a mission. And he's going to be in Twitter a little bit longer. And then I'm sure he'll have a CEO who has newsroom experience like you. He'll have newsroom experience and run the business better. And focus. He says running Twitter right now he's fixing it up. He's on a trend toward breaking even. We have a small investment in Twitter.
Elon just works all the time, and he is literally worried about himself too. And he has experienced tremendous pain during the last 3 months. Of course, the lawsuits are not helping either, especially all of these frivolous lawsuits. But I always said when Elon took over Twitter and everyone was saying, this is too much for Elon. He cannot run SpaceX, Tesla, and Twitter, 3 massive companies on top of the other smaller ones. He can't do that. To which I said, well, you really want to wait a little bit, maybe give Elon 1 quarter or 2 quarters, and then let's see how things go. For example, how is the inventory for Model Y, which is the single most important vehicle for Tesla at the current moment? How is it looking? Yeah, it's looking like it's basically at 0 in the US now. Only 7 Model Ys are available. And the more time passes, the more obvious I believe it is going to become that Elon can handle 1 more company just fine. I mean, during all this time while running multiple companies, he has gotten smarter, so he can add 1 more.
I think about it is I want to find companies, which we'll talk about a bit, about their competitively advantage. There's something about those businesses that makes it very difficult for other people to compete against them. That's what I'm looking for. I'm looking for amazing people running these people, awesome people, sometimes some people call them, great people running these companies.
Check this out. Tesla is #1 most attractive company for engineering students, and that's a massive advantage. November 11th, 2020. 2021 September, SpaceX is #1, Tesla is #2. 2022, SpaceX #1, Tesla #2. And look at the massive difference between Tesla and GM. Only 6.74% of engineering students chose the automotive company as one of their top ideal employers, versus Tesla's almost 22%. And #1, of course, is SpaceX. And if Elon really needs to, he can sort of, move people from one company to another company.
And competitively advantaged, it means other people cannot compete against them easily, and therefore they have an opportunity to price better and give better services and become much bigger than they are now. Tesla is a good example of that. That's what we're doing. And I'm not really worried about the stock market. I don't worry about the market. Don't worry about the economy. I listen to all these guys talking about interest rates going to 5.4%. I don't care.
Same here as well. Tesla stock today is up 1.05%, but it doesn't really matter to me. I actually hope it goes down a little bit because I want a cheaper deal. I like to learn from the best of the very best. Warren Buffett certainly is in that category when it comes to investing, and his average yearly return is 20%. That's when you count his average return from 1965. And does he worry about interest rates? Does he worry about a recession coming? No, he picks stocks, companies that look good to him based on his criteria, and then he goes with these stocks. He doesn't try to time the market. He doesn't try to think about, oh, what is the Fed going to do? He doesn't do that. And if he doesn't do that, why would I want to go against one of the greatest, if not, well, he's certainly the richest investor currently alive? In investing, there are so many ways to make money. For me, I just think it's simpler and easier if I'm not timing the market.
Let's talk about Tesla, because Tesla shares for the year to date are up 80%, but for the 1 year period, they're still down 35%. This is a stock that's gone from $381 to $108 and back up over the last year. That is a lot of volatility.
Yeah.
It's been a ride.
I agree with that.
That is the number one reason why I tell my family to not put any more money into Tesla stock than whatever they are willing to lose. I had some friends asking me about Tesla stock, and they're like, yeah, Matt, right now, the stock is looking good. It's up almost like double from where it was, up 82% from the beginning of the year. It looks good, right? Like, I should put some money in there. I'm like, but I mentioned Tesla stock here, you were like, yeah, Elon Musk is selling stock. Wall Street is negative. All the news negative. No one's buying Tesla stock. Demand is collapsing. It is the end of Tesla stock. It will keep dropping. Well, nothing really has changed in terms of the company. The company consistently just improves. I personally don't see any weakening in fundamentals. One thing that I do hear is, demand in China is weaker. Tesla sells expensive cars. Very expensive cars. Are you telling me they are not going to make a cheaper car? Okay, if you believe that, then you should be selling Tesla stock then, because of course, there's going to be a limit to how many Model 3s and Model Ys Tesla can sell. That is of course true. But Tesla's plan has always been to bring a cheaper vehicle. So that argument makes absolutely no sense long term. Short term, sure. We can make that argument that maybe there's going to be a problem in China, even with these price cuts. You could say, the backlog has not really built up. But that argument long term is only valid if Tesla is not going to release a cheaper car, or if you think that no one is going to buy that cheaper car. So when my friends ask me, Matt, should I be buying Tesla stock now? And then it's these same friends that said, at $100, $110, $120, it's the end of Tesla. I have nothing to say to that because the fundamentals have not changed actually regularly over time. The fundamentals are improving because Tesla is making more money overall compared to all the years before. So I am buying more. I think Tesla stock is a good deal even at significantly higher prices than where it is currently priced today. So that's why I will keep buying more Tesla stock.
Two comments about, number one, how it's the safest car that's ever been built in the world. The safest car ever built in the world. And about a week ago, or 2 weeks ago, or 3 weeks ago, there was a man who took his wife and two children, two daughters, and drove it off a cliff 250 feet above the ground, and at 71 miles an hour. He was trying to commit suicide and murder at the same time. The car flies off the cliff and tumbles down to the bottom, and the roof on a Tesla is 30 or 40% stronger than any other roof, and the center of gravity is the middle of the car instead of the front of the car. And it rolls down to the bottom of the hill, and everyone's looking down, and then they lower people down, and they open the doors, and people just sitting there. They were fine. They were unscathed.
But unbelievable that they got out and were able to.
So unhurt. And so I told Elon he has to text about this and tell people that if they want to commit suicide, they should not be driving a Tesla. They should drive, a Bentley. Drive a Bentley, drive it up the cliff, you'll die. don't do it in a Tesla. So number one, the safest car for them to build.
I would say do not try to hurt yourself at all in any way, shape, or form. Definitely do not do that. It is absolutely unbelievable. I'm at a loss for words. The car was completely totaled, and yet all 4 occupants survived.
Number two, Toyota. So Michael Barron, my son, and I went to visit Toyota in Japan a couple months ago. And we were meeting with an executive, and we had a translator with us because we don't speak Japanese. That guy did speak English. And so we started asking questions. And initially, it starts off, he's responding in answering my questions in English. And then all of a sudden, he switches to Japanese. And it happens every time there's a tougher question. He starts off with English and then goes to Japanese. And I finally say, listen, I can't have a conversation with you when you have a translator and I'm listening to this translator. I got to talk to you in English. And so it was nothing. And then we walk out, and this whole strategy behind Toyota was they are negative about electric cars. Right. And what he wanted to do is he said, we want to have the lowest cost of mobility in the whole world. And so as a result of that, rich people, they can plug in their cars. If you're a lot of places, there's not electricity, so you can't plug it in. So we're not into that. That was what we took away. So we walk out, and I said, Michael, I don't understand any strategy that they have here. This reminds me sort of of Sony in the 1970s. You know, they're just stuck in their ways. But I don't know. We never heard the strategy. And he said, Dad, I've never been more bullish about Tesla. And what do you know? The head of Toyota just retired yesterday or the day before, last week. He's the grandson of the founder. And he says, I'm too old for doing this. He was 65. I'm 79. So basically, he says, I'm too old for doing this. The bottom line is that the head of Volkswagen gets fired. The head of Ford, Mark Field, gets fired because they had bad strategies, bad people. And Mark Field came to visit me a few years ago. You couldn't have believed the negative things he told me about Elon Musk. All wrong. And just, he had a bad strategy, not a great executive. Okay, I shouldn't say that. All right, good guy.
Ron Barron is amazing. Very polite. Good guy. In terms of cost, by not producing electric vehicles, you are literally doing a disservice to the middle class currently and eventually to people earning less money. Because going electric actually saves you money long term. You just have to keep a car long enough. Toyota's argument is purely a political argument that has no strong facts behind it.
The reason we've done better than most, I think, is because we're not all just pedal to the metal, straight ahead. And the idea is that we have some companies that can grow really, really fast, and some companies that are based on book value or based on revenues that we can, consistently give us a base that allow us to take some chance in some companies like a Tesla or a SpaceX.
Even though Tesla stock looks absolutely phenomenal when you compare it to other stocks, it still carries some risk. The way I like to think about it is you get the risk that is similar to that of a big company, but returns are, well, it's more like a startup. That's how I like to look at Tesla stock. So I still have real estate, I have businesses, I have private businesses, and I have strong income as well. And then I have Tesla stock, which is 100% of my stock portfolio. So I shouldn't really call that a stock portfolio, should I? I am also young. So in the absolute worst case scenario, which I would give a very, 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 very low chance, if something absolutely ridiculous happens and Tesla stock goes down an insane amount, I would still be just fine. And this is the Tesla stock buying opportunity explained by Elon Musk. My name is Matt Boyces. Like and subscribe if you haven't yet, and I will see you in the next video. My voice sounds, I think, quite a bit better. I'm feeling quite a bit better, but I'll just be careful for the next few days still, and then I'll be back to making multiple daily videos again. Thank you for watching.